All right, everybody, welcome to tonight's live stream. Okay, so for those of you who just been following me, you know that I just came back from Japan, looking at properties in Japan. But tonight, we want to focus back on our bread and butter, which is interest rate. Okay, and to be very frank, and for those of you who have been following me, you know that I'm not just a real estate person. I'm also very deep into the stock market and options, and everything that has got to do with investing is affected by interest rate. Okay, but the thing is this, I would say I'm not an expert in interest rate, to be very honest, right? I don't deal with it day in day out. I don't look at mortgage rates. I don't look at how much people pay for interest. So when you are not in the area of expertise, right, it is very important to admit that you're not at the SME here. You're not the subject matter expert, and you should bring someone of the expertise. Okay, and I managed to once again invite Ethan from Unbeatable Mortgage, right? Very strong caliber mortgage broker. In fact, every time I do a live stream with him, right? Okay, after that, a lot of my community members will ask him to help and to get some tips on how to get a better mortgage, right? To reduce the interest they have. Okay, so without further ado, everybody, tonight we're going to have a very fun conversation about interest rate. and previously, okay, Ethan and I had a bet about this round FOMC, whether we raise rates or not. Okay, so let me bring on Ethan first. Okay, everybody, if you are with us here, okay, firstly, let me know if you can hear us. Okay, so just put in the chat yes if you can hear us. Okay, let me bring on Ethan right now.
Yay. Hello, hi everybody. Hello, hi Pete. Thank you for having me back.
Yeah, thanks. Okay, Ethan, so last round.
Yeah.
What happened?
Last round.
Okay, so guys, give some context. Last round, basically, before we ended the live stream, we were saying that, hey, let's make a bet, right? Whether will Federal Reserve, Jerome Powell, will he raise rates in the next round, right? So I was of the view that they will raise because they did say that 2 more rounds for the end of the year, and we only have 2 more FOMC, so or 3 more. So if they don't raise, then it's very tight already. So I said, sure, we'll raise, and Ethan said, I will take the opposite bet, right? Ethan said it will not raise. So and the bet is $10. So everybody turn. Okay, Ethan won the $10.
Thank you very much.
Yeah. Okay. So this one later I'll pigeon courier to Ethan. Okay. Actually, just now I wanted to do something with Ethan to test it out. Okay, Ethan, you take out $10.
Okay, one second.
You put it behind your camera. You put it behind your camera first.
All right, got it.
Okay, then I'll say, okay, everybody, now I'll pass Ethan the $10. And then you take it. Wow!
Thank you very much.
Okay, so that was the magic I wanted to do, but we forgot to do it. Okay, so
thank you, sir.
No
problem. It was close.
Hey, but to be very honest, I was very surprised that it didn't raise.
Me too, man. Honestly, mid of the week, I text you. I
But midweek, Ethan already texted me. He said, AP, I think you're gonna win.
Very close fight. Once we saw the inflation number 3.7.
Yeah. Okay, so once again, give some context. When Ethan saw the inflation number, then he was like, because the inflation number was quite high. So Ethan was like, I think Pete win already. They should raise rate. So hey guys, by the way, if y'all can hear me, I'm just checking my YouTube just to make sure everything is good. Okay, it's good. So if you can hear me, do type in the chat, type in yes as well. Okay. So so other than Ethan winning my $10, so Ethan, maybe can you give everyone just a quick spiel, right? What actually happened in the latest FOMC, other than the fact that they raised rates, and also what's your main takeaway from this session?
Okay, so in the FOMC, what I realized, right, was the Federal Reserve actually decided not to raise rates today. I believe they're taking a more conservative stance and try to be able to help the economy recover without any form of hard landing or whatsoever. Yep. If you look at the unemployment numbers, they actually commented about this when they were talking about when Jerome Powell was speaking. Mm-hmm. He was saying that the unemployment numbers are still looking good. It's still okay, and the thing is, they want to be able to hold it down there at the restrictive policy band at this range, and not to be able to like push it further than they need to, if not necessary. But once again, they say, see what is the incoming data coming in, and then from there, determine what is best for us.
Yeah.
What they want to do is, at the end of the day, orchestrate a soft landing, and I think it has become one of the more predictable path right now, and I think they are trying to do so by keeping the interest rates where they are not pushing them higher than they need to, so that they will be able to keep unemployment low, because that's their second mandate in their whole dual mandate policy. What they have then done, right, was that they actually increased the projections for the holding period. They intend to hold it, right, longer. So if you can pull up my slide, right, I actually have a summary of economic projections over there. So over here, the highlighted one, right, you can see, right, in 2023, they have no change. They intend to raise it to 5.6. Since June, they wanted to put it at 5.6. Now it's still 5.6. But for 2024, if you can look at the June side, right, let me do the circle thing. If you look at it, right, they are actually raised from 4.6 to 5.1 and 3.4 to 3.9. What this means is that interest rates are going to be higher for a longer period of time instead of that. Which is when then we want to be able to look at it. This is a visual representation of what's going to happen. And based on this, right, we can see the decreases will come in. And what I believe is I went ahead and do a little bit of math to find out where the numbers are going to be based on the 93.49 correlation. I actually turned out the numbers, and to make things more exciting, I actually drew out the graph for you guys. So this way we can actually take a look at where interest rates are projected to be, and then we can decide whether to take the fixed rates or the floating rates, because the choice between these two can be the difference of tens of thousands of dollars. So what I do is I go full retard trying to understand where interest rates are going to be, and then from there we are able to predict where they might be. So these are the numbers over here.
So the yellow color line is the SORA rate, right? And the red color line is the Federal Reserve rate.
Yes, the projected federal. The reason why they are in squiggly lines, because this is the plans, and plans do change.
Of course.
So that's why I actually drew it in squiggly lines, so that we make sure that everybody is aware. So from today until the end of this year, we're going to see a 4.74% increase. We should see SORA rate about plus minus 3.93 thereabout. And then next year you will be able to see SORA rates drop by about 8.35%, coming in at about 3.6 plus minus 10%. And then this is when I believe, right, the following year, which means roughly about 1+ year from today, right, we're going to see the bulk of the decrease. The bulk of the decrease back into normalcy, or
2 point something.
No, to 3.9. So they're going to drop their EFFR to 3.9, which means our SORA will be about 2.8.
But Ethan, got an interesting question that I wanted to ask you is that why is the SORA rate always lower than the US rate? Why not the same?
Okay, this is very interesting macroeconomics question.
Okay, can you explain it in as simple terms as you can, as though I'm 5 years old?
Can. In the world, there are producers and there are consumers. US is a consumer, so they want to raise interest rates so that their currency is more sought after. And when their currency is more sought after, they got more power in their currency to buy from the producers. The producers are people like Japan, China, Korea, so on and so forth. These countries that are producing goods. So what they want to do is they want to keep their interest rates low. Singapore is right smack in the middle, where we are hard for them to be able to trade properly. And that's why in MAS document, right, you'll be able to see This is the Singapore's exchange rate policy.
Yeah, let me make it bigger. Okay, come.
This is the Singapore exchange rate policy. This is the most important line they have over there, where Singapore interest rates are largely determined by foreign interest rates, and domestic interest rates have been typically below the US interest rate. This is not I say one, this is MAS say one. So I believe this is where we are usually below US interest rates. And looking at the past data, you can see we are quite obedient to the rule.
Very close, very close. But there is always
below.
There's always a separation now, right? We're always below, yeah.
Usually, most of the time, it's always below, unless it's like almost zero kind. And then the second part of the statement will stand where we actually reflect expectations of a trend appreciation of Singapore dollar over time. So sometimes it can go a little bit higher for a while.
I see.
But this usually follows the S dollar NER.
I see. Okay, guys. By the way, quick disclaimer: we are talking a lot about interest rate tonight. It will affect both mortgage rates. Those of you who are into housing, and those of you who are also into stock market, interest rate plays a part as well. But so quick disclaimer. But none of what we say is investment advice, right? We are just basically giving our opinion on what's happening, and you should always do your own due diligence, right? So go and ask your financial expert for advice, if you need to. Okay, not from us. Okay. So just take it as these are two very smart people, but we are just talking to ourselves. Okay. But if you have any questions you want to ask us, okay, this is your golden time because Ethan only joins us once a month, right? Do put your questions in the comments. Okay. So in the meantime, let me just quickly go through what Jerome Powell talked about, and there's some of the things that I highlighted. And the interesting thing is they updated their revised upwards their GDP growth. So now they are saying that the GDP growth for this year is 2.1%. With next year, they expect it to cool off to 1.5. So to me, it's like, wow. So actually, they expect the economy to do well, Right? And if you read further, they say inflation remains well above our long-term goal of 2%. But they talk about things they look at, for example, PCE and stuff like that. And it's all increasing. So I think what Ethan said is true. Like, it is very likely they will hold this current rate for longer. They are not going to raise it like crazy. In fact, they pause now. But Jerome Powell did say that they are likely going to raise it one more time because they say that the rate that they will hold is 5.6. so it's one more time.
Correct.
And they say that the path to go down to 2% is still very long way to go. Right? Correct. So I think this is something that everybody needs to be aware. But the most important thing is this. These are a group of people that sets the interest rate. And they are simply telling you by end of this year is 5.6. End of 2024 is 5.1. And by end of 2025, they expect it to be 3.9. Right? Okay. So my take is this. For maybe later, Ethan, you can share what's happening on the ground since you help a lot of the people looking at mortgage rates right now. Is that if we are looking at interest rate as per what they say, for example, 3.9 by 2025, right now, the property prices are here, for example, here, and the interest rate is here. If we expect the interest rate to drop to 3.9% by 2025, where do you think this will go? Right? So that's my take to a lot of people. I know what I share on public channel, on YouTube, sometimes it's a bit controversial because people say, Pete, you are the delusional guy and keep thinking that the property price will go up. I say, it's not that I'm delusional. Maybe I'm biased, I will admit that, but I'm not delusional. It's that, just ask yourself, if the interest rate goes down and people can borrow more easily, do you think they'll borrow less? Right? So I say, guys, you have to take a position here. For those people who have been telling me that higher interest rate drive lower property prices, you must also at the same time agree that if interest rate goes down, and they are bloody hell telling you already, okay? By 2025, they expect it to be lower than what we are now by at least 1.2%. So if you believe that interest rate higher brings down property price, then the opposite must be true also, Right? You cannot choose and pick your story. So if you choose and pick your story, then God help you. Right? Okay. All right. So that's what I wanted to share with everybody. Hey, but for Ethan, maybe can you give your take on the ground when you help your clients with mortgage loans, repricing, refinancing? I know recently you did magic for one of my friend as well. We shall not mention name, but you can talk about what you did for him or her. Okay, later. Right?
Okay.
On the ground, what do you see in terms of the activity of people taking mortgage? Is it increasing? Is it dropping? Or what's happening?
Okay, I'm going to answer that, and later I'm going to circle back to what you just said about the supply and about the price of the property.
Yeah.
Actually, if you think about it, it's just pure economics of supply and demand, and we are a very, very small place. And we are good in healthcare, we are good in education, we're good in security, and I think 20 years down the road, I think not a lot of people would disagree that Singapore property prices are going to increase. And now to talk about where mortgage rates are going, can you repeat the question? I was too excited replying your first question.
No, so on the ground, what do you see? Do you see like right now with high interest rate, are there fewer people taking loans, or actually it's still about the same, or is that more? I don't know. You know, it's up, down, or sideways. I don't know. What do you see in terms of activity?
In terms of activity, I think they are still quite similar because personally, I deal with people who are refinancing or they're having a new loan, or they're planning an exit or something like that. Then I will talk to them and strategize for them whether the new loans or the refinancing portion. Okay. But once again, right, for interest rates in Singapore, right, you probably want to look at the real interest rates rather than just the nominal interest rate.
Should I bring up any of your slides? Just let me know, okay?
I'm trying to find the slide. So there are. Oh, I didn't include it on this one. But anyway,
you can verbalize it, it's fine. Yeah.
Verbalizing it. So at this point of time, right, when you're looking at mortgage rates, right, because mortgage rates are one of the cheapest rates of borrowing you can ever get, because number one is collateralized by a property. Number two, it is going to be a long-term debt. So what happens over here, right? You will be able to see people want to continue borrowing, because if you are borrowing money, can I ask you, does inflation affect you?
Of course, yeah.
No, when you're owning the money, inflation affects you.
Yeah.
Right? When you're borrowing the money, inflation doesn't affect you. So what I tell my
clients, it helps you.
It helps you almost. Projected numbers for 2024 is going to be roughly about 3%, and interest rates for 1 year lock-ins are roughly about 3.2, 3.1%, depending on the loan size right now. And
so this is the current bank rates that you are receiving from the various banks, right? Because I know, Ethan, you work with different banks, you get the rates from many banks, then you share with your clients. So currently this is you cannot say the bank name, but this is an example of what the banks are sharing, right?
Correct. So from there, you can roughly see where the banks are thinking interest rates are going to go. Because these are what's known as the market rates, the 3-month ORA plus the spread. This is very typical for the banks to be able to lend out.
Yep.
So depending on the loan size, you can see, right, over here, it is approximately, you can see over here, it is approximately 4.3%, 4.2%, 4.2%. However, when you then move over, right, to look at the fixed rates, right?
Fixed rate is lower, actually. Yeah.
Lower number. So what this means, right, is that the banks predict that the next few years, our interest rate is going to go up or go down. Probably down.
Yeah.
Right? So this is where we take cue from them a little bit. So most of the time, people are choosing between, hey, should I go floating or should I go?
Yes, that's my next question, because some of the students are texting me, is it? So Pete, now I need to, okay, so Ethan, for example, now I need to reprice, right?
Correct.
Okay, or refinance. Should I go for, once again, guys, not investment advice, but should I go for, let's say it's me, okay, Pete is going for it. Should I go for a fixed rate or a floating rate in your view, in this case?
It depends. Are you selling off your property? Then after that, from there, I recommend which to take. Because there are certain rules that allow you to have a waiver of fees due to sale or something like that. If you're telling me,
let's say I want the option to sell, like let's say maybe 2 years from now, maybe not immediately, but maybe 2 years from now.
maybe 2 years from now, okay. If you're looking at 2 years from now, maybe consider either repricing or to be able to get a fee, a waiver of fee upon sale kind of package, so that you do not get any penalties. But between floating, right? At this point of time, we have something in between. I like the short term that's 6. I like I like the rates that will be able to be most profitable for us. So back then, just now we were talking.
What's in between? What's in between in this case?
The 1 year fixed rates.
Oh, okay. Let's see. 1 year fixed. Okay.
Correct. So at the 1 year fixed rate, right, it's quite similar to the 2 year fixed rate.
It's actually quite low, you know. So if you borrow 1.2, it's 3.05 only. You know?
Yes.
And the next year is only SORA plus 0.5.
Yes.
So if the SORA drop to say 3%, right? So the next year will be 3%.
We got projections. So for example, next year, right, we are looking at we say December of
3.6.
3.6, right? We take 3.6 plus 0.5, that's still 4.1.
Okay, I got it. I got it.
But the thing is, if you take 2.8 plus 0.5, that is going to be around 3.2 thereabout.
Correct.
So there's a lot of factors, including supply, demand, and thank God we're in a perfectly competitive society. So they tend to undercut each other and everything.
But the lock-in period for this kind of 1 year fixed rate, then straight away switch to floating is how long? 1 year, 2 year, or
1 year?
Oh, 1 year. Oh, so you can actually fix it again if you want in year 2 or something.
Right. So you see, right? The difference between the 1 year fixed rate and the 2 year fixed rate, right, is the lock-in. So for example, right, the 1 year fixed rate, right, you're only locked in for 1 year, which means next year, right, you have the ability to go and shop across all the banks and then get the best rate possible. However, if you are going in the 2 year lock-in, you are stuck with the current bank. You will be able to get a free conversion, which means they allow you to revise your rates within the bank.
I see.
Pete, I ask you, if one bank versus 10 bank, what is the probability that the one bank will get the best rate?
True.
And on top of that, they have you under lock-in, so they don't have a very big incentive to be the most competitive. Whereas when you're in the open market, everyone is going to be trying to get the customer in, trying to bring the person on board to the bank. Because once you have the mortgage, you will have an account. Then after that, they ask you for you want credit card. Then after that, the whole package and the kitchen sink they will throw in already.
That's true.
Right. So, and the banks value the clients more than just the mortgage alone.
Yeah. They want you to stay with them, basically, right?
Yeah, correct.
Okay, Ken. Okay, so we have a couple of questions coming in. The first one is by CPA. CPA is asking, what can retirees do with their spare cash now? Retirees have a short timeline and low risk. Okay, I don't know. This one, I don't know, Ethan, if you have any comments. I'll share something first. So this one is maybe up my alley a bit more about investing. I would say CPAS, the important thing is this: when you say you're a retiree, right? Actually, you may not have a short time frame, because what age do you retire, right? 62, 65, something like that, right? Okay. So even after you retire, hey guys, these days, your retirement age is 65, but you still can live for another 20, 30 years, easily. Okay. Based on the current expected lifespan, you are going to live to close to 88 to 90. Right? So when you say you have a short timeline, I don't think that's short, unless you tell me you're like already 80 plus 70, 80 plus to 90, then I say, okay, it's quite short. Okay, right? So if you still have a 20-year time horizon, actually that's not short at all. And I don't think you should be putting your cash, for example, in in my view, if I'm in your position, I wouldn't put it in fixed deposit. I'm not saying you shouldn't, but in my view, I wouldn't, because while right now the fixed rate gives you 5.6%, for example, right? Fed funds rate is now 5.6 by end of the year. But is it going to be 5.6% for 20 years? No, right? So even if you have $1 million, 5.6% give you 56K only, per year. Is it enough for you to survive? That's another thing, right? And when you're 20 years time horizon, I think capital gain can still be a big part of it, right? So if I'm in your shoe, with 20 years, let's say 20 years to go, I will still put it pretty much in property and equity market. Because it's been proven that for the longest time horizon, and Ethan has also looked at housing prices like me, right? If you have a 20-year time gap, and then you just shift it around, I don't think there's a single time gap whereby you buy and then you lose money 20 years later. Almost never. Right? I might be wrong, but just go and double check. Maybe it's a very small percentage. Okay? Right? Okay. Next one. Okay, sorry, Ethan. Yeah, go ahead.
So for retirees, right, with their spare cash, right, number one, right, after you're 55 years old, your CPF actually works a little bit like a mega bank. They'll be able to give you about like 2.5% thereabout. But if you are looking at something slightly a bit more liquid and something a bit more cash related, right, you can consider things like the government bonds. But the thing is, depending on your risk appetite, and we are not trying to advise over here, but over here, I believe there is Singapore savings bond right now also 3.16%, and this is something good for 10 years.
Yeah.
So rather than the 1-2 years fixed deposit, you'll be able to do this and take out anytime you want. These are a few things that you may want to consider, but talk to somebody about it, talk to somebody more experienced about it within your own portfolio, because everybody is different. The way I invest is very different from Pete, and the way Pete invests is very different from me and everybody else.
Exactly.
So, yeah.
Exactly. So guys, the thing is, this is not. I know sometimes the answer we give might be a bit roundabout. It's not that we don't want to give you an answer. It's that we don't know your exact situation, and theoretically we shouldn't be giving you our advice also. So I hope you understand that. Okay. Another thing from Francis. Francis is asking, how will the bond market react? Are US Treasury bond prices going up? Okay. Okay. To me, it's very simple. It's not about interest rate going down or going up, right, Francis? The main thing is this. Maybe I bring up just now the what is that? The transcript. Let me bring it up again. One thing that was very clear in the transcript that everyone should pay attention to is this. They say that the market is very tight. So what they did was today we decide. Okay, maybe I scroll higher. Today we decided to leave our policy interest rate unchanged and continue to reduce our securities holdings. Everybody, these security holdings, what do you think are they referring to?
10-year.
Is bonds, yeah. 10-year bond, 20-year bond, 30-year bonds, right? The long-term ones, not the short-term ones. So if the government, who is the biggest buyer of bonds in the past, and now they are saying, even though we don't increase interest rate, but we are selling bonds, you want to be the one buying from them or not? Think very clearly about it. A lot of times people think bonds is just related to interest rate. I say yes, it's true, but the main driving force of bond prices is not just interest rate. It is the supply and demand.
Correct.
If more people want bonds, then of course you get more higher price. If people don't want bonds, it's just like you go pasar malam, then the person says, sorry man, I don't want your bonds. Then you're going to get a low rates, So I think it's very important to understand this. So I personally don't think so. That's my opinion. I don't think bond prices will go up that much from here, simply because the biggest buyer in the past, the Federal Reserve, is selling. Right? So that's the key thing. I don't know, Ethan, do you have any views on bond prices these days?
I think I agree with your view, because when they are selling away, then what happens is that the bond prices go down. But the bond yields, however, when they are high right now, I believe it can be part of your portfolio, not the whole thing, maybe.
Yeah, exactly.
And speaking of that, right, have you seen the 10-year, 2-year maturity, the spread?
How big is it now? Do you have it? If you have it,
yes, I have it. The bugger is still going. I think it's 200 over sessions now.
What?
It's still negative.
Well, it's coming to a point that it doesn't matter already.
It almost is. And this used to be one very, very good recession indicator. All of these are gray lines. As you know, these are recessions. So long there is a negative yield curve, there would be a recession that precedes about 6 months or so later. And,
Wow.
and right now we are in a very, very precarious situation where it is
Yeah.
negative.
Yep. I fully agree. I think right now, guys, if you are not into the bond market very seriously, please don't try your luck. Okay. Okay. Let's move on to other questions. Hey guys, by the way, these are all interesting questions. Do keep them coming. Okay, so this one, well, interesting. So TechFact Global is asking, I'm not sure if I deviate, but which location is best to buy HDB? Wow. Actually, TechFact, if you can give me more content, background, maybe I can share with you. Okay, the thing is this. I don't think HDB is a very good form of investment, to be very honest. Right? I just share one thing very recent one that I was shocked. I was honestly shocked. And it's this one. Okay, let me bring it up. So can y'all see this? So this is the this is the latest $1 million HDB. Okay, $1 million. And it's in Bukit Panjang. I was shocked. I was like, what? Because last time when we talk about 1 million HDB, I think Ethan, you see in your clients, right? It's usually what? Duxton, Dawson's, Sky Terrace, right?
Yeah.
Or jumbo flats, right? Maybe those dual flat combined together in Woodlands, maybe.
Maybe.
But this one, guys, it's not a jumbo flat. It's just an EA, you know. And it's $1 million. Whoa. So to answer TechFact's question, I don't think there's any best location to buy HDB.
It depends on TechFact.
It depends on what you want. You want to buy for own stay or you want to buy for investment or whatnot. But I can tell you, even a location like Bukit Panjang, which is not the most accessible place on Singapore Island, is going at 1 million. So I honestly don't know how to answer the question. But Ethan, on your your dealings with all your clients on HDB, right? Do you have any takeaways in terms of like where in Singapore HDB activity is a bit higher? Or where do you recommend or suggest, not recommend, suggest to TechFact? Yeah.
I think over here it depends on whenever you're buying a HDB, right? Quite in line with what the government is saying, especially with the 3 new schemes, right? The more mature estate you are in, the longer the lock-ins, the bigger the clawbacks of the subsidy. So at the end of the day, you can think of HDB as a very good place to lower your cost of living in Singapore rather than a form of investment. And if you are able to distinguish between these two, then I think you'll be very successful in your property journey. And I think you need to speak to a pro, so you can reach out to Pete's team, and then Pete will break it down, analyze, and then tell you what will be better for you.
Yeah. Hey guys, by the way, those of you who want to come on my consultation, I think we still have some slots, maybe like 2 or 3 left, right? So if you all want, the link is over here. Okay, let's move on to the next question. We'll go on very quickly. So this one, very to the point. Asaibui is asking. Asaibui.
I like his name really.
Okay. How will the expected lower rates in the months to come affect local property market and stock market? Okay, so maybe Ethan, you can talk about property. Maybe I talk about stocks. I don't know.
I will try my hand, but at the end of the day, this is a very everything is almost connected, and this is a very small part of the equation. The fact is that interest rates are coming to come down, and when interest rate come down, what happens is that the buying power will increase or decrease. It will increase. So when the buying power increase, then there will be an upward pressure towards the price. But there are a lot of other factors like the time decay, the type of property, speculation, supply, demand, whatsoever. But in terms of interest rates, yes, it is pushing it up slightly.
Yep.
Do you agree?
Agree.
Excellent.
Yeah. Okay, so regarding maybe I talk about property a little bit before I move on to the stock market. Okay, is this a lot of times I think once again the common consensus people tell me, right, is that Pete, higher interest rate just means lower property prices. And I challenge that thinking because I always say, guys, is it your opinion or is it a bloody fact? Very important, you know, because your opinion means nothing if it's not backed up by numbers. Right? So just now Ethan was reminding me one of my bosses, ex-boss famous saying, Ewan always say, right? In God we trust, the rest of you bring data. Okay, so I bring your data, okay, I show your data. Don't say I never do. Because when I talk about interest rate going up may bring up higher prices, people think I kisiao. Okay, so number one, this is data from not just in Singapore but globally. And they basically look at how will mortgage rates affect home prices. And it says here, since 1976, mortgage interest rate and home prices appreciation have had a positive but weak relationship. Hey guys, you know what the hell the positive means? Positive means if interest rate goes up, home prices appreciate. Right? It says here, higher mortgage rate tends to occur alongside higher home prices appreciation. But it's a weak tendency. So when they look at this, they draw the plots across many years. Right? Every dot is one change in interest rate versus home prices. So this is home price increase or decrease. This is interest rate. And you can see that a lot of times when there's higher interest rate, actually the home price increase. Can you see that? This is US, by the way. This is US. Okay? Right? So lower prices that brings about a lower interest rate that brings about lower home prices is actually a very small portion of this data set. Can you see? It's just here only. The majority of the data points basically tell you home prices increase regardless the whole mortgage rate is negative or positive.
This one is because of inflation.
Exactly. So guys, don't be so concerned about interest rate. What you should be concerned with is the person buying from you have better income? Whether the GDP is increasing. And the good news is Jerome Powell already say the interest, the GDP seems to be good. Right? They're telling you that the numbers not too bad. Okay? So let's come back to here. If I look at another data set, this is Australia's data set. They are basically looking at interest rate versus housing price. And I can tell you there's almost no correlation. Right? You look at this chart, you cannot definitively tell me that, oh, is it positive or negative? Anything is just random. Okay? Right? This is Australia. And this is one data set I got from Singapore. May or may not be accurate, but I think it's pretty accurate. CPI is the Singapore Property Price Index, Private Property Price Index, sorry. Okay? And 3-month SIBOR rate last time. And this is up to 2021 only. So this is an old article. But it's okay because we want to see old data, right? Old data tells us the future, right? And you can see, hey, there's a period where the interest rate goes up. Hey, property price also, the interest rate go up. Property price also increase. Then interest rate come down. Property price also drop. So how? Right? So guys, it's very important to not just base your investment decision, be it housing prices or stock market, based on interest rate. In fact, if I have a bit more time to answer a sideways question, for stock market, it's also the same. There isn't a very strong correlation between interest rate and stock prices. In fact, the most direct correlation that we have to answer his question, right, for stock market is actually what? Is the earnings of the company. If the company can make more money, then of course the share price go up. Right? But if the company don't make money, then the share price will not go up. Okay? So guys, a lot of times when it comes to investing, right, I know out there are a lot of people telling, giving you a very sexy theory, very complicated. And that's why I love to bring Ethan here, because he tells it as it is. Right? You can see that he just report as it is. He doesn't give you fluff. And that's what I like. Because if I need fluff in life, I need excitement in life, I can go and do bungee jumping. I don't need to go and talk to people. Okay?
Totally recommend, by the way.
Right? The most boring investment is very often my most profitable one. Right? Okay? So guys, if you have any questions regarding mortgage rates or interest rate, you can put down in the comments to ask Ethan as well. Okay, so Ethan, let's come back here. Let me just maybe ask a few more questions that I got from my community.
All right.
Let me see. So one of the questions that they have is that how do we increase loan amount? Okay, so maybe this one, you can talk about the magic that you did for one of my friend, but don't talk about names lah. Just talk about, can say, I don't know. What do you do?
This beautiful person's name is
No, cannot say name. Don't say name.
okay,
Just say what you did. Just say what you did. Just say what you did.
Okay, so what happened was I was able to help her or him refinance over to a place, and then number one, what we did is we extended the loan tenure. Number two is that we actually deviated on the total debt servicing ratio. So when you're looking at refinancing cases, right, especially homeowner, like if it's a property that is own stay, right, the banks are willing to be able to deviate certain certain boundaries lah. And because of that, we were able to get a loan from a different bank when the current existing bank did not want to do the repricing. Correct. So because of that, we saved quite a lot of money lah.
Yeah. The person told me like, wow, Ethan did a great job, man. Because the person actually went to the bank and wanted to reprice. And he thought that simple reprice, just change interest rate only, right? So, and in the end, the bank rejected the repricing for some reason, right? And he thought that, wow, is it because like the salary not enough or something like that? And then I said, just go and talk to Ethan, right? See what Ethan can do for you. Because what Ethan did was Ethan dig deeper and talk to more banks. And actually, her case is not as bad as she thought, right? And the banks out there some of the banks were willing to take on her case or his case, right? So in the end, it worked out fine, right? It worked out fine. So guys, one thing I always ask everybody is, when you are having a mortgage loan and let's say you're paying very high interest or you're just due for repricing, refinancing, it never hurts to get expert opinion to look at it, right? In fact, I can tell you why I like to work with Ethan is because I think I mentioned this before, is that when I wanted to do one of the refinancing and repricing for my mortgage, right? Then after Ethan look at it for a while, then he told me, hey Pete, actually the best thing to do is not to do anything. Then, I was a bit shocked, not because he told me not to, the answer is not to do anything, because I'm quite used to not to do anything, okay? But I was shocked that he actually suggested that, because when I don't do anything, guess what? Ethan, as a mortgage broker, he doesn't stand to benefit. Okay? But the good thing is I like to work with people with morals, right? Because he's saying, Pete, I can tell you to go and refinance and just force you to do it, but it will not do you any good. Right? Yes, he may earn commission from there, but he won't do me any good. So he said, you just don't need to do anything. And I love that. I love the honesty. I love the fact that he put clients in front of himself, right, before himself, and think from their shoe, right?
Correct.
So thanks, Ethan. Thanks for really helping a lot of my community member, because I can help them in terms of like looking at property, which one is good, which one is bad. But when it comes to mortgage, right, I'm not the best.
You don't say that. But anyways, it is actually a profitable thing to be transparent. Otherwise, you see, number one, I wouldn't be here. Number two, people will not recommend their friends over. True. So honestly, it is, to me, I feel that it is
play the long game, basically. Right?
Yeah, I play the long game. At the end of the day, mortgage is about understanding money and time. So if you are able to push the commission, like if you don't so greedy over the commission, eventually you be able to get a bigger part of the pie, especially when you're known for being the person that recommends.
So really, I love it when our morals are very aligned, our values are aligned. It's all about trust, right? I trust you to do the correct thing. You trust me to do the correct thing. In fact, right now when we talk about Japan, just now Ethan told me, wow, hey, got some possible mortgage thing about Japan. Wow, I'm super excited now, because guys, I just came from Japan, and Japan, one of the issues with the real estate there, although I love it as a country, the issues with the real estate is that it's very hard for foreigners to take a loan. Right. Okay. So this one I don't talk too much. Right? After this stream, I'll talk to Ethan. Okay. Okay. Hey guys, by the way, here for those of you who need mortgage help, I think some of you are texting me right now. Right. I cannot help you, but I got SME here, Ethan from Unbeatable Mortgage, that can help you. Okay. So for those of you who need any help in your mortgage, you just want an expert to look at your mortgage, see where Can he help you to pay less interest, extend your tenure, or just get a better interest rate? Okay, or you're buying a new home, or you're refinancing, repricing. I can't recommend anybody else but Ethan at this point in time, right? So this is the link over here, rebrantley/unbeatable. I will put that in the comments as well, okay, so that you all can click on it, right? Once you click on it and you submit the application, then Ethan's team, right, will get in touch with you. Okay, all right. So I'm just going to leave it here. Okay, let me see if there are any other questions as well. Okay, some of the questions, a bit more stock related, right? What's your take on crashing take place for US equity 2024, 2025? My take is I don't know the better, to be very honest. Because if I know this well, I will just go and short the market from now on. Right? Okay, so but I urge you out there are people giving you predictions. I'm very, very certain. Okay, but those people who tell you they can accurately predict the market, you should be very careful. Be very, very careful, right? Because I've been in the industry long enough, I can tell you nobody predicts the market. Nobody. If the person could predict the market, then he would have predicted the COVID crisis and whatever not, then probably he would have made a bucket load of money. And if he can predict the market, I can tell you, you will not be the one hearing from him. He will be selling the information to the banks. You will be the last person he will talk to. Because who the hell are you, right? So guys, think about it very objectively. If someone gives you a very hot tip advice, you must ask yourself, why me? Why only me? Wow, I'm so lucky. Okay, think about it. Okay. Junior JR is asking 99 years integrated project or boutique freehold. Wow, tough call. Ethan, you got any idea? Okay, this is not investment advice. This is just two smart guys talking to each other. Okay.
Okay, depends. I believe Pete, yourself, you said before that 99 years got higher capital gains.
Appreciation potential, yes.
Appreciation potential. However, it depends on where you want to hold the property. If your aim is to hold a property for 50 years, then maybe the boutique freehold might be slightly better because it retains more value because it's not subjected to the Bala curve as vigorously as the 99 year.
True. But I give a slightly different take, right? Is that I've seen boutique freehold in Singapore. For example, the Geylang ones. Very boutique, very freehold also, okay? But the price don't increase because it is, of course, Geylang plays a factor, but it is because it is so small, right? Some of the boutique freehold have next to no attractive points to people to buy, right? For example, very limited facilities. The gym is very small. The pool is almost like a weather pool, not a real pool, right? So doesn't attract buyers. So if you ask me in this case, actually I would want to go for 99 years integrated development. But having said that, I do agree with Ethan what he say. If your thinking is that, hey Pete, I'm not here for capital gain, I'm here for cash flow. I want to collect rental until I go and see my maker. Then okay lah, right? Or you think that, hey, I want to pass it down to my children, right? 60, 70 years from now. Then okay, go and buy freehold, right? So JR, the thing is this. It is not a straightforward question. Therefore, there's no straightforward answer, right? It depends on your situation, your profile. So if you need my help, just go and apply to the consultation, right? Because if I tell you the wrong thing, then after that, wow, habis.
On public domain, some more kena crucified.
Yeah, kena crucified. Later I say wrong thing. Okay, so no. Right? So what I do at the consultation is very simple. I understand exactly what you're going after, and then I tell you that which type of property that potentially you can consider. And final decision is still up to you. Right? It's still up to you and for you to decide. I am merely here to provide the information, right? To help you make a better decision. That's all. Okay. Okay, so let's see. Got any other questions? Okay, so actually I think that's all. That's all the questions that we have. All right, so just nice. We are coming up to 1 hour. Okay, so let me just put on the link once again. For those of you who need Ethan's help, I've already pasted the link for Unbeatable Mortgage in the comments, right? But for those of you who want it, it's over here. Okay, rebrantley/Unbeatable Mortgage. Okay, and guys, one thing is this. in order, I just want to say this to all of you, because some of you when you give comments, right, you can be very vague. But if you want Ethan to help you as much as possible, give as much detail as you can. Because the more Ethan understands your situation, the more he can think of possible alternative ideas, solutioning to help you. Okay? All right. So over here, we always say we can bring you to the river, but we cannot push your head into the water. Right? So you need to help us to help you. Okay?
But then, Pete, can I share one more thing?
Yeah. Go ahead.
All right. So one thing to keep in mind, right, is that your interest rates, right, can bring up my slides.
Oh yeah, come.
So the interest rates usually, right, the first year is good, the second year is good, the third year is the one, the thereafter
not so good.
These are the not so good rates. And if you're looking at 3 months SORA plus 1%, right, you're looking at roughly about 4.7%. So what I do, right, normally, right, is that I help my clients, right, for example, you, right, be able
Can
to...
we maximize this a bit more? Like all the way if you can. Because it's a bit hard to see the number.
1 second, let me see. Okay, so I believe they're quite alright already. So what I do, right, for this, right, what I can do is just simply move your current interest rate to a refreshed interest rate, whether if it's within the bank or to a different bank, right, we'll be able to save quite a significant amount of money per month. And over the 2 years, you can see we actually save tens of thousands of dollars for you.
Yep.
So the good thing is our service is completely free, and this is a consultation where you'll be able to see what we can actually do for you lah. And I think this is one of the more important part on top of like increasing the loan tenure for you, doing all the things that we are supposed to.
Correct. So Ethan goes over and above to help you. And guys, for all of you who are in my community, Ethan is doing this as a complimentary service. Okay? So it makes absolute sense. If you are going to refinance, reprice, why not just get Ethan to have a second look at it, right? To make sure that you're making the correct decision. Okay? All right, fantastic. Okay, everybody, so that's all we have for this session. Once again, Ethan, thanks for coming on, right? And sharing with us your perspective. So hopefully the next round, I will win the bet, I hope.
So what are we playing on now? December or next one? How?
Wow.
Come, let's look at the FOMC.
Now I'm scared.
Okay lah, for fun.
December, November, one more, right?
November,
October, one more, December, one more. Yeah.
December is when we will have the summary of economic projections. So which one would you want to play with?
Okay, I think it will pause again, then go up in December.
Okay lah, for the hell of it.
For the sake of it, right?
Let me take the other side lah. For the sake of it, let me take the other side. We'll see.
Okay. So what do we wager on?
Same old 10 块钱, or you want a beer?
I wager you a beer. I wager you a beer.
Okay, let's do that.
Hey, actually a beer is more than $10. Oh shit. Okay.
Depends. I got a nice spot. Happy hour 10块钱.
Okay. So maybe the next one we can even do live at a co-location where we're drinking beer lah.
Okay. We'll see what happens.
Okay, everybody. So that's all for tonight. Okay. So I'm going to discuss with Ethan about Japan after this. And we'll have more updates for you guys when the time comes. Okay. All right. So everybody, thank you so much, and have a good evening, and enjoy yourself. Have a fantastic weekend. All right. And once again, for those of you who need help from Ethan, the link is over here. Okay. All right, everybody. Thank you so much. See you next time. Bye-bye.
Bye-bye. Good night.